This is a 10-part mini-series that I wish I had access to when I first started trading. Lesson 1, how to create a bias using the high time frame. Let's go. Okay traders, so on your chart, on your TradingView application, the first thing we are going to do is we're going to go into the top left and we're going to search German 40, GER 40. Now select the indices box. Now typically most of you would have got into trading by seeing Forex adverts, etc., Euro, US dollar, and they are great. However, I made the switch to indices. I'm going to show you why. So this is your first 5 seconds analysis, okay? What I want you to do is I want you to go on GER 40. I want you to click the daily chart and I want you to roll your mouse all the way out. Now, what can you see? Okay, this is a 5 second analysis. We can clearly see that we are bullish overall over time. So just by trading an indice with a macro bullish sentiment, we are going to have high probability buying than selling. This alone is going to increase your strike rate, right? Yes, on an intraday perspective, we can trade the lower time frame. And in this mini series, I'm going to take you through that process. But this is why I jumped, right? And if you look at my live trading data, my backtesting data, my students' backtesting data, you will see that they are taking around 70% buys just by trading on the GER 40. There's other assets that we trade, SP 500, US 30, commodities, gold. But what these one thing share in common is a full 5 seconds quick analysis of bullish over time. Right, let me just reset this chart for you so it's nice and clear. Zoom out again. I can go through gold, US 30. I wasn't prepared for this, as you can tell, but nevertheless, even though gold's been, since the war in Iran, etc., we've been heavily bearish, and that caught a lot of people off guard. But digress slightly. So back on to the German DAX. Now, the first question is, why do I trade the German DAX over SP 500 or US 30? Simply because we are less affected by the US news releases. Now, if you have some trading experience, you will know that when 230 volatility enters the market on SP 500 or US 30, especially if there's news, the news is a catalyst for a huge impulsive move, and you can often be run as liquidity. So in simple terms, German DAX is Germany's top 40 companies, and we have less geopolitical facts, okay, impacts. So let's continue. This video is the higher time frame, okay? What you want to do is go on your 4-hour chart. If you are new to trading, you can go on your settings, you can systematically pause this video on my settings, and you can copy my canvas and my symbol exactly. So pause it on this video, your chart can match mine. Now, if you're new to this series or new to trading, having your chart look the exact same as mine is going to make your process a lot easier. Instead of working out your bullish and bearish candles, you are going to have the exact same colors as me. So we always start on the high time frame, right? And you may be thinking, why? Okay, well, those who aren't new to trading will tell you the high time frame is our narrative, right? If we get in line with the high time frame and we can enter on a lower time frame, we can follow the H4 or the daily trend. But this simple task is going to help you identify that trend, okay? So what I want you to do is go on the 4-hour chart. You can reset the chart view so it's nice and clear. First thing I want you to do is go into your settings here, find this dot tool, okay? Now, this is your first dot. You won't have to resize it. This is a perfect size. If you hold Control over and then click once, it will duplicate that dot, so you don't need to go back into the drawings tool. What I want you to do is start to map obvious highs and lows. Now, a high and low is simple, right? If you look at my chart here, this is a high and low, right? It's not to confuse you. This is a basic, simple way of mapping your higher time frame directional bias. So all we're going to do is I'll leave this here. We are going to put one of these dots on each high and low that we can see, and it needs to be obvious. Okay, so that's my first one. I'm going to go that one, and then I'm going to follow the highs and lows. Now, they aren't going to be obvious all the time. All I can say is just pick what looks obvious for now and worry about the detail a bit later on. You could have this as a high and low, or you can have this as one move down. You wouldn't be wrong. Now, what you'll fastly discover is trading. We all trade differently. We all see the charts completely different. However, if you collect enough data and you are profitable over a large data sample, the exact same way you see the charts, we can both be wrong and still make money in the markets. So I'll continue. I skipped this low because I just did, and then here we go. So this is our first task, okay? This doesn't show us much right now. All we are doing is training our eyes to spot the highs and lows. Now, I journal using Discord, so if you don't already, I would create a free Discord server, and I would start filling your Discord with all these mini lessons that I'm about to teach you over this mini series, and you are guaranteed to have a brief understanding of how we at Headwize Markets trade, right? So this is your first task, right? If you want to, you can go into the bar and you can search SP500, US 30, or commodities, gold and silver, and you can complete this task. But remember, this task is on the 4-hour time frame, okay? So that is task 1. If you didn't know already, you can simply go to your top right, click this camera, and you can take a screenshot, copy image, etc., and you can journal your work. Now what we're going to do is we are going to advance on this, okay? Now do not advance on this task until you can effortlessly open a chart and map highs and lows. Now I assure you, if you skip this process and go into our range mapping tool, right, you are going to have a lot of discretion what is a high and what is a low. So this is a perfect introductory task on spotting your highs and lows. So this is task 1, okay? Now once you are familiar and confident that this is something you're able to do without doubt or etc., and also if you're new to trading, this is going to be the first time annotating charts. But if you are confident, right, we could go on to the next task. So I'll remove all these drawings. Our next task is mapping our ranges. So if you go to the left hand side, you'll see this top left tool. Go all the way down to GAN box. Draw a box, but do not be too alarmed because your GAN box is going to look absolutely wild. So what I'll do is I'll draw mine out. I'll click on it, and then I'll go into the settings on the bottom right here. I'll put it up so you can see. Right, you can click your settings, this little cog, and then you can simply deselect all of the irrelevant levels, and then you can copy mine exactly, and then you can right click, save as ranges, okay? And there we go, that's our first range. Now this flows on, follows on, flows on, rolls on, exactly from the previous task. So we are going to go back to our highs and lows. Now remember, I've not said this already, but on a chart we always go left to right. So our first task is finding our obvious high and low. So working left to right, what you can do is you can use this tool and you can find 2 highs, 1 low and 1 high, or 1 high and 1 low, and they need to be next to each other. So as you can see, low, high. I'll remove these. So what I'll do is I'll get my GAN box. I'll start at the low. We include the wicks, always going left to right. You need to make sure of this. This is very confusing at the start. We're going to trace this all the way up to the top, okay? Now that is your first range marked. Well done. Now it may seem very minor, but this is a huge step, especially if you're new to trading. And even if you've been trading for a while, we stick to the H4, waiting for the H4 to trend, print predictable structure. This is going to be the one shift in your trading that you wish you would have known a lot earlier. So we're going to go with our first GAN box. Left to right always. As we can see, this particular time we went left to and right, but we went up, okay? The next task is to pull this across until we hit a body closure or a leg of price. Now, as you can see, right, what I want you to do is find the circle tool. So on your tools on the left-hand side, I'll probably won't be able to find this now, which would be really embarrassing. Circle. You have to bear with me. I am not the best on these drawing tools. Anyway, we'll find this circle tool. You're going to be a lot better than me, but I'm not going to digress too much. And you're going to highlight the break, okay? So in your Discord server, you can make a topic or a channel. We can call it 4-hour directional bias. And you could put this range example straight into your Discord server. And your journaling work, right? Every piece of work you do, you are taking a step in the right direction, compound your learning over time, and we're going to arrive there. Let me just drink some tea. Nice. And then we'll continue. So you're going to highlight where this Gann box has met a leg of price, which is one leg down, like one drive up or drive down, or a full body candle closure. As you can see, this is a wick, but it's one leg down. You are going to circle, right? You are going to get your call out annotations box, and you are going to state broke at the bottom or broke at the top. Okay? Now, this is extremely important, okay? So, when we break at the bottom, we are going to track back to the next obvious high. So, wherever the range is interacted with a full candle or a leg of price, we're going to put our mouse on that interaction, and we are simply going to go left again, but stick to the line of candles. So if we broke at the bottom, we are going to go left, following the candles till the next high. So as you can see, I'm following the candles left, and I'm going all the way up, and this is the next high, okay? So you can either put a dot on it to remind yourself where you have found from your retracing. And then we are going to remove this. You can take as many screenshots to save it as you want. We're going to start a new Gann box from the highest point of where we've put our red dot. See this wick? We include wicks in this. And because we broke at the bottom, we're going to go from the top to the bottom. So we're going to start our new range at this highest point. We're going to follow the leg of price down all the way past where we have just broke. And then we are going to go to the next obvious low. And as you can see, this is our obvious low. There's no more room for our Gann box to extend further. There's nothing to follow. The only way we can follow these candles is by going back up, okay? So this is the low. Now this is your second range created. So congratulate yourself if you're still with me. This is a simple and repeatable process in which you quickly be able to predetermine your bias for the day. So congratulate yourself if you're still with me. What you can do is you can tidy off this range here. There we go, done. Then again, we're going to pull our second range all the way across until we hit a solid body closure. Now, as you can see, we've hit a solid candle here. If you want to, you can circle it so we know, even though I can't find where that circle draw tool is, but I'll have a really quick look. It might be here. It's definitely not there, is it? Line, ha! We're getting somewhere. No, it's not there. Oh, this, look. There's actually a circle there. That's where it is, where the circle already is. So we'll go on. We'll go on to this area. Click this, find the circle. There we go. Now, what have we done? We've broke at the bottom, so that means we track back up to the top. Okay, so you can go on your dot, find after the break, follow the candles all the way up until you meet a high, and that's where we're going to start our next range from. Okay, our Gann box, we'll go back and we're going to go to the low. Okay, where is the low now? Can I carry on going further at this point, or has it stopped? Well, we can't go any further at this point, so that is a low. We could tighten this off, pull this back in line with the previous one so it looks nice and neat. Remove the circle if you want to. If you want to keep them there, doesn't matter. You're going to get to the point after this video and a bit of practice where you can zip through these examples. So again, we go left to right. We're pulling the Gann box all the way till a solid candle closure. As you can see, this is a perfect example, even though I've missed the candle. This is a perfect example. We have now broke at the top. So as you can see, at this point, we are looking to sell. Why? Because we are printing bearish ranges, okay? Now, here we have our first break one. Again, because it's the first break to the upside, and this is the first time you have seen this, you can highlight this. You go to your dot tool, and you can follow the candles left. And in order to follow the candles left, we have to go down this time. We're always moving back left after the range interaction. This is something to note, okay? Follow it all the way to the left. Put the dot on the obvious low. As you can see, here is a low. And unlike these bearish ranges, we're going to start at this low. We're going to go from the wick. And then we are going to go back towards the break, all the way up to the top until there is no more high, okay? Now, discretion is going to play a part in this. If I go back to my earlier message, we are all going to see this charts differently. When you get more experience, you can have tighter ranges. You may class that as a high because you can see the pullback. That's fine, but for me, this is the obvious high and this is my range. So again, do that. Remove the circle. This is our break one, okay? So previously we was going down, which is bearish, and now we are going bullish, which is break one. So what you can do is break one. Now this is the same process, right, that every trader in the Headwize market uses. Now, this may feel like it's obviously going up or down, but when price is challenging, having this mechanical rule set is going to eliminate a lot of the thought process. And as you backtest and collect your data and put this edge that Headwize Market provides into full force, you will see that you can mechanically 90% or more stick to this rule set and make money with a strike rate close to the 50% depending on how strict you are. So this is break one. Now in your example, I strongly suggest that you always mark your breaks. Now this is new, but we need 2 ranges consecutively to change our bias. So at this point, we are still selling. We don't know what's left. All we know is we've got 3 bearish ranges, 1 range, 2 range, 3 ranges. We are looking for sells only in this section of price. This is break one, so we would still be looking to sell at this point because we need 2 breaks. So we're going to pull this across to the body closure, wick, body, and then we're going to highlight the break. We're going to track left. Because we broke at the top, you can only go left by following the candles down because we broke at the top. And we're going to go to the obvious low. Now, you wouldn't be wrong in saying this low or this low. That's a little bit of a smiley face. But we'll remove them. And what I'll do is I'll go to the super obvious low, which is this. I'm going to remove this. And that's where I'm going to start my Gann box. Okay. And again, we're going to go from left to right until we are met with an obvious high. Now you can, this to me is sideways price movement here. So I'm going to go all the way here. I'm going to tighten this range off. And this, you've got it, is break 2. Now, when we trade, we are literally going off the high time frame. Most strategies depend on a trending market. Now, how do we know it's trending? We are printing consecutive ranges. At this point here, what is the obvious move? Would we be looking to buy? Obviously, in the advanced section, we can capitalize on any direction of the market. But for now, in simple terms, would we be looking to buy when we are obviously printing bearish ranges? No. And furthermore, would you have a higher probability buying or selling, right? Now, if your entry model presents in these areas and we look for the short, we have a significant chance of entering a trade with a higher success rate than if we was buying. And these ranges are just a clear example as to why. So we have break 2. So at this point here, we are looking to buy. Now this is your first bit of work, okay? You've had mapping highs and lows, and you have had ranges for directional bias. Now, if you're new, or if you're experienced, or struggling to find consistency, this is a mechanical rule set that is going to keep you out of less probable trades. This whole mini series is going to give you 10 lessons, and these 10 lessons are the exact lessons that I wish I had when I was starting out. What happens is, typically most traders come into trading and they get consumed by learning. Every Instagram video you see, every process, every directional bias video, everything you'll see, right? And you get caught in a vicious cycle thinking that learning is progressing. You will get to the point where all of your efforts need to be internal, okay? Now, when I say internal, throughout trading, you are going to have an edge, a strategy, a pattern recognition, whatever you want to call it. You are going to have significant data, and this data is going to show you the market conditions, the strike rate, the risk to reward. You're going to build a trade book of the most probable trades, okay? Now, when you get consumed by learning, what is going to be easier, right? Is it going to be easier trying to follow 20 different strategies, 20 different indicators, 20 different insights, or is it going to be easier to follow one asset, one strategy, and have the patience in between to wait for the higher probability sells according to your data? This is some food for thought for any aspiring trader, and for those traders who are stuck in that loop of learning new strategies, new skills, new edges. What you'll find is you'll have an edge in the market that works. You will collect enough data. I'm going to take you through these mini lessons on how to do so. You will have a playbook of trades. You will see what your market conditions are most favorable for the strategy that I'm going to provide you. And then all the internal work is you against you, having the patience and discipline to complete the daily tasks and have the time and patience to wait for the market conditions to present. This is trading. This is what real trading is. If you have found any value or anything useful within this first mini lesson, please hit like and share. This mini series is purely for the sole intention of helping beginner traders or those who are failing to find consistency in a short 10 mini lesson series. Thank you for watching, aspiring traders, and I'll see you on the next one.